The next topic covered in Chapter 5 is charitable contribution deductions. You are generally allowed deductions for making contributions to qualified charities. Um, this portion of the text goes into a lot of specific detail in terms of what kind of property you're giving, um, and you can kind of peruse some of this, but basically I want you to be aware that typically you can get deductions for these kinds of contributions. Um, if you give property, though, the amount of the contribution is you have to look and read this to determine how much you can take as a deduction, and it will depend on the kind of property that you're giving. Typically, it's the fair market value, whatever the value of the property is, but there are some exceptions to that. Let's see what else. There's also a limitation on the amount of charitable contribution deductions, and it is 10% of taxable income before some items are included in that, or I should say, before considering certain items like. Let's see, where does it talk about? Right here. For this purpose, taxable income is computed without regard to charitable contributions deduction, any net operating loss carryback or capital loss carryback, the dividend received deduction, and domestic production activities deduction. So your taxable income number has to have those things omitted from it. Then 10% of that number is the limitation on what can be deducted for charitable contributions. If you do contribute more than that 10% during a year, you can carry forward those deductions and use them in succeeding tax years that don't have the income limitation. Research and experimental expenditures, these are deductible too. The costs of developing new products, basically. You have a choice in how you can handle them. You can deduct them in the year paid or incurred. You can defer and amortize those deductions, or you can capitalize them, which is basically put them on the balance sheet as an asset. And again, there's reasons why you would do these things. Primarily, if you don't think you can get a benefit currently for a deduction, maybe you're in a low tax bracket, or maybe you have no taxable income at all, you might want to choose to capitalize and deduct later. So read through the R&D section. These sections talk about the different options. And then some various other expenses. Just a discussion on interest. Refer and read and refer back to that if you see things in the homework assignments. Certain kinds of taxes. Just more reading. The domestic production activities deduction. This is a made-up deduction by Congress to induce companies to produce goods in the United States instead of shipping those production jobs overseas to where the labor is much cheaper. This is a deduction that it doesn't exist for book purposes. It's just a calculation that a company does, and it gets to take an extra deduction to reduce its taxable income. I just kind of want you to know what it is. You're not going to have to do any calculations with this in this class. So I'm going to blow past this, and I'll pick up and talk about cost recovery or depreciation in the next video.